JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 19th of May 2021. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the chart. So the first one I want to pick up here is the German DAX, and yep, we are drifting lower. We are dropping below the, or should I say, we've dropped below the 15,215 territory. I spoke about this level, and what I said to you today, guys, that and yesterday as well, if we get a drop below that area, then there is a good chance we could see further declines, especially if the index remains and closes the daily candle below that hurdle. Well, I mean, so far only half of the work is done. Basically, we did saw the drop, but can we close below it? We'll just have to wait and see, guys. For now, yes, we are leaning a little bit more towards the downside in the near term here, but again, I'm not going to really drag this one way too much to the downside for now. Only if it stays below this area, then only to the towards this area right here, the support area between the 14,805 and the 14,845 levels. The S&P 500. So the S&P is, or should I say, it was did drift lower yesterday. It closed below this 4,147 territory. I spoke about this as well because what I said previously, that if it drops and stays below this area, then it also would stay below the 21-day EMA, and some potential traders might see this as a bearish, some potential bears might see this as a good opportunity to step in. So basically it could be seen as a bearish indication. So if we take a look at the cash index right now, we'll see that the price is drifting further south, and we are currently not far from this hurdle right here, this 4,068 territory. We're just slightly above it. We're around 4,080, but basically we're not far from this. But in a way, what I'm going to mark here right now is this one, the 4,057 territory, which marks the current lowest point of May. And yeah, let's see if we can actually end up reaching that one together with this upside support line taken from the low of the 30th of October, because let's not forget that as long as it stays above this, above some of these upside lines, then there's still a chance for this one to reverse and push higher. For me, to be honest, right now the more comfortable and probably maybe a little bit of a safer option for the upside could come on this break here above the 4,183 here, because at the same time, on a break of that level, the index would confirm a forthcoming higher high, and potentially more buyers could join in. But at the moment, it is how it is. We are leaning a little bit more towards the downside here in the very near term, but we'll be very careful near this whole area right here. NASDAQ 100. So the NASDAQ is also, or should I say, the cash index is also drifting lower. So as you can see, yesterday we've closed below this hurdle, below the 13,237 zone. I spoke about this, and what I said, that if we stay below it, then there is a chance for this one to drift maybe towards the 12,967 territory, marked by the current lowest point of May. Currently, we are trading on the cash index just slightly above the psychological 13,000 mark. But in a way, if it basically it's below the 100-day EMA, and if it stays below it, then, well, I mean, further declines could be possible. But if you want to be a little bit more on the safe side, initially, like I said, I'll aim for that 12,967 territory. But if that gets cleared, then yes, of course, this will confirm a forthcoming lower low, and further declines could be possible, guys. So keep that in mind. Now, jumping into WTI Oil, beautiful move here to the downside, a further move to the downside. We managed to reach the lows that we've tested yesterday, and most importantly, we've reached the lower side of the rising channel here, and currently we're flirting with it. At the same time, also, I'm looking at this hurdle, the one that I spoke about previously, the 63.80 zone. If we get a clear break and a drop below that, then, well, I mean, this is where it could turn out to be a little bit more ugly for more bulls, because the bears could start running into the field, guys, because again, like I said, this could change the direction of the short-term trend. Silver also is drifting to the downside, so but still there is positivity in silver here, because we're still trading above this upside support line taken from the low, the 31st of March. So which means that even if we see a further decline here, if this upside line stays intact, then, well, I mean, another push higher could be possible, because at the same time this upside line also coincides with the 21-day EMA here shown as the yellow line, which means that basically we could still see some upside here on silver. So maybe we'll just class this as, like I said, as a temporary correction before another possible leg of buying. But again, let's be very careful here. You can see that yesterday, for example, yesterday's daily candle formed a nice shooting star here, or actually more of a doji, and yep, it failed to remain above this 28.32 territory. Initially we did push above it, but now we're well, now it kind of it did do its job. It provided good resistance, and now we're seeing a result of that. We're seeing a nice little correction lower. So for now, we're keeping an eye on this upside line, guys. Now looking at the crypto world, and Ethereum, yep, dropping heavily. So in general, all the cryptos across the board are moving south. There are reports saying that China is kind of moving in on the cryptos, kind of forcing some financial institutions to avoid using the cryptos. And yep, this is kind of the negativity that we're getting, and which is affecting kind of the cryptos in a bad way. So of course, the Ethereum drifted lower and tested the 100-day EMA here, shown as the green line, which is not far from this upside line as well. So although we did push through the upside line here, taken from the low, the 25th of March, we still, and you can see that the bulls managed to kind of drag this one higher again. Let's see if the crypto remains above this upside line and above the 100-day EMA. If it does, then, well, I mean, maybe another push higher here could be possible. So let's keep that in mind. But for now, guys, long story short, this whole thing here is not really looking well. Nevertheless, I mean, the idea that I spoke about, that I talked about this morning, where I said that if we get a drop below this hurdle, the 2,858, then my next target is the 2,548 zone, which we managed to reach, and so that's a good result here. So now the big question here is, can we see a bit of a move here, maybe a rebound here from this upside line and a move higher? But at the moment, all eyes are on this upside line together with the 100-day EMA. Similar stories with Ripple. Ripple is breaking through the lower side of this triangle pattern, the one that I talked about previously, and most importantly, it did initially drop below this 1.20 territory right here. But currently it's still, as you can see, the bulls are really trying hard to keep Ripple above that hurdle. Let's see if they manage to do that, if they succeed. But if they don't, then, well, I mean, another a further decline here could be possible. So if we stay below the 1.20 territory today, then my next target is the 100-day EMA here, shown as the green line, or the 0.8747 level marked by the low of the 23rd of April, guys. Litecoin, similar also story, but this one is a little bit on the weaker, even let's say looking a little bit worse than the others, because it's breaking it broke below this upside support line taken from the low of the 25th of March, and also dropped below the 100-day EMA, and most importantly it currently remains below both of those. So again, another thing here is to keep an eye on this daily candle. If it stays today below this area, then yes, of course, my next target is the 207 territory marked by the low of the 23rd of April, or the 200-day EMA, which is approximately around here, near this low of the 4th of April, or in other words, I think that's the lowest point of April, near the 192.35 level. And like I said, it coincides with the 200-day EMA. So, but of course, I'll aim for those levels if we see this daily candle today staying below this upside line. Now jumping into AUDJPY very quickly. So yep, the whole kind of the markets, the equity markets are trading in a risk-off fashion. So basically, people are moving, stepping away from equities, and this is the result we're getting here. Yen buying is increased. People are looking for something more, let's say, like more of a safe haven, and this is where the Japanese yen comes in. And for now, I mean, we're finally breaking this upside line here, taken from the low of the 30th of October. So let's see if we can, first of all, stay below this upside line, and can we then drop below the 84.30 zone? This is going to be very interesting. If it does that, then yes, of course, further declines could be possible. Then my next target would be somewhere around here, near the 83 zone, and then we would take it from there, guys. AUD-CAD. So we did get some numbers from Canada today. So we got these CPI figures, the headline and the core ones. So for example, the core month-on-month CPI figure came out better than the previous. It's plus 0.5%. The headline year-on-year CPI figure also showed up better. The previous number was 2.2. The forecast was 3.2. The actual number was 3.4. So a great result, and yep, we're seeing the Canadian dollar strengthening against some of the major counterparts. And to be honest, I mean, even the weakening oil is not helping. But in this situation, in this particular situation with AUD-CAD, well, I mean, we see that basically the Australian dollar is getting weaker due to the kind of risk-off sentiment, and in a combination between the between these two, I mean, well, you can see that yes, the Canadian dollar is winning definitely, and now the big question here is, can we see a further decline? But for a further decline, I need to see a nice good drop below the 0.9338 zone right here, and I would need to see the daily candle remaining below it as well. Now, slightly different story maybe on USD CAD here, but it is kind of, let's say, a little bit on the positive side. This 1.2062 territory continues to provide support, as you can see. The issue here is that basically, although good numbers from Canada came out, oil is drifting lower. So, and another thing is that sometimes most cases recently, I mean, the US dollar is seen as a safe haven, and basically this is the combination you get. Like, so you have equities that are falling, people jumping into safe havens such as Japanese yen and US dollar. You have oil dropping, that means weaker Canadian dollar. So in a way, we should see this pair pushing a little bit more to the upside. However, the better than expected CPI figures from Canada are kind of halting this kind of stronger move to the upside. So that's why for now I would say we'll have to just wait a little bit on to see how this is going to perform. But the most interesting thing here is the 1.2062 territory, this 1.2060 or 62, approximately around there, because that's the lowest point of 2017, guys, and this is where we're currently sitting at. This is a very strong area of support. Let's see if we can actually rebound nicely from this area. If we can, well, I mean, this is where it could become interesting again for more buyers. And for now, I mean, looking at even from the technical side nicely here, because you can see that we broke this downside line taken from the high of the 21st of April. We broke the downside line, and in a way we should see this one maybe pushing a little bit higher. However, after we broke it, then the pair declined again. But this is one of those situations when even if it breaks, let's say, a downside line, it still then declines. However, it declines above the downside line. So basically the downside line acts as a nice little kind of trampoline even maybe. So we might see this one maybe pushing higher, depending if the equities continue to drift lower and the oil market also drifts lower. Then, well, I mean, this could maybe be a good opportunity for the bulls. However, I would prefer actually to wait for a break above this barrier right here. Let me just quickly recycle one of the lines here. So there we go. So this one right here, the 1.22 zone, a nice good pop above the 1.22 territory may lead the pair towards a larger correction to the upside. That's what we can call it basically, because let's not forget that overall we're still trading below this downside line taken from the high. Let me just grab this one very quickly. There we go. Taken from the high of the 19th of March of last year. So jumping into GBPCHF, so the pound is on the stronger side today. However, this pair, I keep watching it, and it's really, really attractive because basically the pair is still trying hard to go over this 1.2790 territory. So again, I'm still waiting for that one. Yep, basically for now at the moment, I mean, I like the setup here. It's a nice potential bullish setup. However, I'm not rushing into anything because basically we need that confirmation break. So I don't want to end up having something like we had here on the 19th and 20th of April, and also here back on the 12th of May. So we break through this barrier, but then at the end of the day we just still drop lower and stay below this hurdle, and then we correct to the downside. So that's why I would like to see the daily candle remaining first above this area, and then we could go for some higher levels. So yep, I can see in the chat room here, Evu, yes, USD CAD. I do look at this one sometimes, but at the moment I think that this is an interesting situation on USD CAD. So let's see if it can reverse. But I'm not, like I said, as I mentioned to you before, to everybody, guys, that we need some confirmation breaks, and wait for those confirmation breaks, and then and like I said, in a similar story here with GBPCHF. EURUSD. EURUSD, there's our confirmation. And if you remember last a few videos ago, I mean, I spoke about this pair, and I said to keep an eye on this 1.5691, 92 zone, approximately around there, and I said that we need to see that daily candle remaining above this area. So we had a strong, nice pop here, and in a way, if nothing changes, I mean, this is where it's going to become very interesting for the buyers, could become very interesting for the buyers. So let's see if this can actually retrace a little bit lower, and if it can stay above this barrier. If it can, then yes, my next target is the 200-day EMA here. together with this 1.5947 level marked by the high of the 28th of January. And finally, EURUSD. So, yep, the EURUSD pair is kind of stuck here because, again, the dollar picked up buying interest, and although euro is also on the kind of stronger side, so kind of it's a bit of a mixture here. It's a battle between the two, and I would say I'm leaving this one for now. And you can see that the range where the today's trading range is stuck in, it's basically stuck between these two levels. The 1.2190 level, the one that I mentioned previously, that's the high of the 22nd of January, and it's below it's between this barrier and the 1.2243, which I also mentioned. That was my next target after we broke above this area here, and we managed to reach this area. But then what I said, that if we climb further north above this area, then yes, of course, my next target is the highest point of January and the current highest point of this year as well. But of course, for now, let's keep it short and simple, guys. I mean, at the moment, you can see that there's a bit of a struggle here for the EURUSD bulls. Let's see if we can climb above this hurdle. Let me just drag this one right here. Let's see if we can climb above this hurdle here, above the 1.2243. If we can, and we can stay above it, then yes, like I said, I'll continue aiming for the upside. So guys, that's it for this session, and to be honest, I mean, that's it for me this week. So if you want to catch me on Monday, guys, I'll on my Traders Espresso as always, 6 o'clock GMT time. But I hope, guys, you found the videos this week useful. I really appreciate your time, guys, your views, your likes, your comments. I really do. So thank you very much for all that. And if you want to, like I said, catch me on Monday as always at my Traders Espresso, 6 o'clock GMT time. For now, guys, have a wonderful trading day, evening, week, remaining of the week, and I'll see you on Monday. Thank you very much, and bye-bye.